To go quickly to one of our other Wall Street beat topics, David Einhorn. I mean, Larry Fink is in the midst of one of the biggest existential debates in investing right now, sort of active versus passive, right? And when you look at the active managers like David Einhorn, dare I say.
Well, and this is what he said yesterday in a letter. He says, "This must be frustrating to our partners. It's certainly frustrating to us." I mean, do you love that? Like, hey, I'm real sorry our fund lost 1.6%. It must be hard for you.
It must be frustrated.
Sit on the couch and tell me about
it.
And
it appears what they're getting killed on is his so-called bubble basket, which includes the likes of Tesla and things that he keeps saying we're going to bet against, and Caterpillar. He had a big bet against Caterpillar, which, as we know, has all of a sudden started shooting the lights out.
I believe an unsuccessful short in Deere as well.
Yeah.
But it does go to show how hard it is to make money for the investors that we're used to, and how hard even the macro environment winds up being as well.
Right, and we've talked a lot about the macro environment and some of the names, whether it's Brevin Howard or Brokos or others, who really did not do well, to say the least, last year because of the macro environment and this lack of volatility. Now, sort of trying to stitch it all together, if we do have more deal making, if we have companies who are more active, spending money, not just on some of the issues that you've been talking about, Beth, but also really doing deals again, does that make it a better market for some of these hedge funds?
Well, to tie it together, you hope some of those deals will be actually supporting infrastructure, or supporting retraining of workers and things like that, which we're down to our benefit in the longer term rather than just a quick hit.
Right. And, clearly, at least some of the will is there. We'll see if the politics continue to line up, and we'll see if the politics line up with this lighter regulation that you've been talking about, and do companies really have the incentive to do all these things?